Yeah, Lee, what did you make of the session? We seem to be pretty sort of treading water there for a while, but then towards the close, there seemed to be a bit of a speed up of the selling.
James, the market got absolutely smashed on that closing auction. I've got the intraday graph behind me, and you can see that in that closing auction, we lost 25 points. In fact, losses in the banking sector doubled in that closing auction. We were seeing the banks down by about 0.7%. By the close, the banking sector down by 1.5%. Now, it looks like this is being driven by fears around MF Global. A Wall Street Journal report saying that MF Global is looking at bankruptcy, that US clearinghouse have been notified to prepare for bankruptcy, and that the likes of Macquarie, State Street, as well as Goldman Sachs running their ruler over the company in Manhattan at the moment. So the banking sector down on fears that we could see, I guess, a bit of contagion from this disaster. We also saw that material sector under a fair bit of pressure. Iron ore prices are at 15-month lows, trading at about 127 US a tonne. And we heard news that Bayo Steel would be joining other Chinese steelmakers in trying to renegotiate fourth quarter prices with Vale. So we did see those iron ore miners coming under a fair bit of pressure. Fortescue was down by 3%. We also saw BHP Billiton down by 2.3%. And of course, the Japanese yen intervention having a strengthening impact on the US dollar. Bad news for commodities across the board. We saw copper down by 3.1%. Lead was down by 4.1%. And of course, those base metal miners being impacted quite heavily. So Panos down by 5.5%. Lynas coming out to say that output from its Malaysian plant would be delayed by 6 months, so that stock also down by 7.3%. I guess the good news is in terms of volumes. We did see high volumes going through the market for a Monday. In fact, this is the best Monday in terms of volumes that we have seen on the ASX for the month of October.
In the show, but obviously, Julie, Kieran very much, I suppose, pointing to the issues we've seen in terms of Qantas grounding announcing the grounding of their fleet on Saturday. Obviously, the market having their chance to express their opinion on it today. It seems to be a pretty positive one.
We have seen a positive reaction in Qantas' shares, not surprising given that in the month of October, Qantas shares reached an all-time record low at $1.35. So given that there's a little bit more certainty around its business and that they will be looking at flying at their full capacity on Wednesday, we did see the stock gaining about 4.5%. Of course, there is still quite a bit of uncertainty in the stock, 21 days worth of negotiation, and then that may be extended for another 21 days if they are making any ground. So the next 42 days potentially are going to be important in terms of Qantas's stock. But the big winner out of this, it looks like, has been Virgin Blue. Since the lower price that we saw in August, the shares have risen around about 50% and continue to gain today. So those shares up by more than 4% once again today. So Virgin shares continuing to climb. Qantas shares also up, but coming off a very low base. And I guess if you have a look at brokers' target prices for Qantas over the next 12 months, it's around the $2 mark. And if you have a look at Qantas share price, around about $1.60. So it still has to rise about 25% to get to brokers' targets. But the re-rating is going to be around what happens around this industrial action.
As I said,